Navigating the intricacies of employer obligations and employment taxes can seem daunting, but it is crucial for maintaining compliance and ensuring smooth operations of your business. Here is a breakdown of key regulations and responsibilities that you should be aware of as an employer based on the income tax employment regulations. When you consider employment taxes and contributions in Jamaica, you may recall seeing deductions from your gross pay on your payslip, such as pay as you earn, national insurance contributions, education tax, and national housing trust contributions. Furthermore, employers have to make their portion of contributions and taxes, except for PAYE, and most employers have a further obligation to contribute to human employment and resource training, HART. Emoluments refer to all payments made to an employee, which could include wages, salaries, bonuses, or any other remuneration, any benefit to a person by reason of their employment, whether it be cash or non-cash. Employers are required to calculate taxes on these payments based on cumulative figures. This means all payments from the start of the year up to the current date. Importantly, not all emoluments are taxable straight away. Deductions such as ESOP contributions are treated favorably up to a certain limit, fostering employee participation in share ownership plans without immediate tax implications. Approved pension contributions and NIS paid are also deductions that help to minimize your taxable emoluments. Now, it's important to understand what an employer is. An employer is defined as any entity or individual who disperses emoluments, whether directly to their employees or indirectly through another party. Under employment regulations, the distinction is made between an immediate employer and a principal employer. This differentiation is crucial when the actual payment to employees is handled by another entity, known as the immediate employer. In such cases, if the employees are under the general control and management of another person or company, this entity is recognized as the principal employer. Despite not directly dispersing the emoluments, the principal employer holds the ultimate responsibility for ensuring compliance with employment regulations. To facilitate this, the immediate employer must provide the principal employer with detailed information about the emoluments of the employees, enabling the principal employer to fulfill their statutory obligations. Persons may sometimes enter into contracts with other individuals where the intention is not to create an employment relationship. However, even though the contract may allude to this intention, it would not supersede the tax laws. There is a special provision in the tax legislation which indicates that even when a person attempts to consider himself self-employed or to be an independent contractor under a contract for service, rather than to be seen as a party to a contract of service, or an employment contract, once the person receiving the service has the right to exercise control, supervision, and direction over what the person does and how he does it, then the service provider's income from the service recipients would be seen as emoluments and subject to PAYE. Every payment cycle, the employees must ascertain the total amount of emoluments paid and the corresponding tax deductions and contributions. If the deductions exceed what was previously calculated, employers need to adjust by either deducting more or repaying the excess to the employee. This ensures that the employee's tax liabilities are accurately reflected and managed throughout the year. This holds even if the employee changes employers during the year. The regulations also cater to special circumstances. For instance, if an employee receives emoluments from multiple sources, the commissioner may set specific allowances to ensure the correct total tax is collected. Similarly, benefits like housing or company cars are factored into tax calculations in a predefined manner, with specific percentages applied based on the value of these benefits. As an employer, you have several key responsibilities when it comes to the maintenance and reporting of employment records. You need to maintain accurate employment records, meaning keep detailed records of all the employees, including their emoluments, the taxes deducted, statutory contributions, and any remittances made to the Tax Administration Jamaica. You need to issue payslips, regularly providing each employee with a payslip, and these payslips should detail the payments made, including any deductions for taxes and statutory contributions. This transparency helps employees understand their earnings and deductions clearly. You need to provide essential tax documents like P24 forms and P45 forms. P24 forms are annual certificates that summarize an employee's pay and taxes deducted throughout the year. This should be issued annually. And P45 forms are issued when an employee leaves the company, summarizing their pay and taxes up to their departure date. And finally, there's filing, reporting, and annual reconciliation. The employer must file monthly remittance forms, SO1, and pay over to the Tax Administration Jamaica the taxes and contributions calculated on the emoluments paid to their staff for the month. The monthly remittance form should indicate the total employee and employer contributions of all applicable employment taxes and contributions, meaning PAYE, NHT, NIS, EdTax, and HART, and also indicate the gross emoluments paid to all staff for the period. Additionally, at the end of each calendar year, it is crucial to reconcile and report all payments made and taxes deducted. This is done through the filing of annual employer remittance forms, that's SO2. This annual return is not only essential for tax assessment purposes, but it also ensures that all financial activities throughout the year have been accurately recorded and reported. Compliance failures in this area can lead to tax discrepancies and potential penalties. By adhering to these guidelines, you can maintain a compliant and transparent payroll system that benefits both the employer and the employees, ensuring all obligations are met efficiently. Employers must adhere to these regulations, as non-compliance can result in significant penalties and interest. The responsibility lies with employers to ensure that taxes are correctly deducted and that any irregularities are promptly addressed either through additional payments or refunds. Understanding and adhering to the income tax employment regulations is not just about compliance. It's about fostering a transparent and supportive work environment where both employees and employers are clear about their tax obligations and benefits. By staying informed and vigilant, employers can avoid common pitfalls and maintain a healthy, compliant workforce. Whether it's through regular updates from tax professionals or workshops on tax regulations, staying informed is key to successful tax management in any business. For more information, contact Signature Creed and Associates. Email info@signaturecreed.com or call 618-9855. Thanks for watching.